Let's shift to the first part of the theme where we're talking about RBI, which is actually directing large NBFCs to actually go ahead and stop the new lines of credit. And this is the Flexi Loan product. This is an NDTV exclusive that Vishy is joining us to give us more details. Vishy, what are you picking up from your sources? And two, what is the kind of impact and who gets impacted?
So sources are telling NDTV Profit that the Reserve Bank of India has raised concerns with how NBFCs are extending credit lines to some of their borrowers. So essentially, this is specific to perpetual credit lines, or credit lines where the borrower does not have a defined repayment period, has a certain limit available to them, and no such restrictions on how much they can borrow and when they need to repay these loan amounts. In fact, borrowers can borrow money through these credit lines and then repay them over years if they wish to, only paying certain interest amount to ensure that the account continues as a standard asset. Now, it seems that the Reserve Bank of India, in a recent meeting with chiefs of NBFCs, has raised concerns with the quality of this product. The RBI is saying that these NBFCs typically do not have any visibility on the borrower's ability to repay their loan amounts and whether they're repaying money using more loans from this credit line, or if they're using funds from their own businesses that currently exist. So essentially, if a borrower has borrowed, let's say, 10 lakh rupees worth of a credit line, of which they have used about 2 lakh rupees worth of loans. So instead of taking money from their own business lines, they would borrow maybe more money from the existing 10 lakh limit and then repay the old loan. This ensures that their outstanding loan amount does not change, but the account remains standard for a longer period of time than necessary. The RBI has suggested to these NBFCs that they may want to slow down on these loan products and eventually stop them over time and not create any kind of disruption in the existing loan product, because currently about 50 to 60,000 crore worth of loans have been extended by NBFCs to borrowers. These borrowers could include salaried individuals. It may also include small business owners and self-employed individuals who might be borrowing money from large NBFCs.
Thanks, Vishy, for getting us the details. So 4 stocks that we are watching out for on the back of this is a Bajaj Finance, Bajaj Finserv, Aditya Birla Capital, Poonawalla FinCorp, as well as Jio Financial Services. These are the ones that could get impacted as well. The biggest one taking a beating is a Bajaj Finance, but the others are still up and about in trade. So I think this is telling you something, because we don't have the breakup yet in terms of what is the quantum of the AUM, or the loans that are actually given out as a flexi loan product for all of these companies. So that is one of the crucial data points that will be required from the company's end as well to understand the overall impact. But media reports are indicating that the total exposure is around 50 to 60,000 odd crores in a product like this. And the major concern they have, as Vishy was mentioning, was with regards to a irregular repayment cycle as well. But also, let's welcome in Gaurang Shah, Head Investment Strategist at Jio Financial Services, to understand his views as well. Gaurang, good afternoon and welcome to the show, and always a pleasure to speak to you. Clearly, I mean, from what you heard from Vishy as well and the stocks that we were talking about right now, how are you looking at this kind of a move? Because again, this is not something which is official yet. It's more of source-based information where they will be looking at this portfolio. And 4 companies that NDTV Profit has identified so far is Bajaj Finance, AB Capital, Poonawalla FinCorp, as well as a Jio Financial Services. What is your view?
Thank you, Hiral, for having me on the show. Good afternoon to all of you all. So without going into specific names, because there is still no clarity, I think this is not the first time that the authorities have taken these steps to control the systematic risk which may evolve from a long-term point of view, in case if this is gone undetected. With respect to unsecured loans also, there was guidelines a couple of months back. See, what happens over here, Hiral, is that when you go on giving flexi sort of line of credit, that can lead to a lot of complicated problems. First of all, a systematic risk in terms of providing a credit line to a borrower who is habitual to take one loan to repay another loan. And this can, over a longer period of time, if it is not detected and if it is not controlled and if it is not put in its place, can lead to a larger risk. We've seen these kind of unfortunate, misgovernance, if I can use that terminology, by certain NBFCs, not one, but one too many times. And every time that such instances have cropped up, I think the authorities have stepped in and taken appropriate step. So I don't think it is unviable for the authorities to control this unfortunate, larger than life, unsystematic risk scenario evolving. I think it is very appropriate because this may also lead to a domino or a chain effect, not restricting itself to the NBFCs but also to other entities and sectors.